G'day, everybody. It's Alan Endres here, founder of ZooCoins and Zookaz. Today is the 22nd of September. This is one of our daily updates that I do, my time being your time, and it's Zoo Time. Very excited today to present a topic dear to my heart, which has been an ongoing journey for many, many years, and have never flinched or lost faith in this product, which we're going to see come to fruition in Zookaz. And it's all about the lotteries that I created in 1989 and have been persisting with through enormous amount of regulatory hurdles, court cases, protection of the rights that was created, that we had built over those many years. And that foundation stone, everybody, goes back many, many more years and has an integral part, more so now, of relevance than it ever did over that journey that I've persisted with. And I think you'll find this very intriguing because for me, it's not some airy-fairy thing that was dreamt up. It's something that's got a solid foundation going back. In fact, it just goes back to Roman days in terms of the way humans and financiers and geniuses in many years ago had thought of how to accumulate money for the government by minimising the amount of interest that they pay back their subjects. And the Romans actually started it. But I sort of take a trigger date in the year 1569, which is a very exciting time back then, you can imagine. The Queen Elizabeth I is running around, and you can just picture the imagery of fighting the French, fighting the Spaniards, and running out of money and desperately needing funds. And they came up with the concept of the lotteries. So the first draw was in 1569. Now that's 452 years ago. 452 years ago, which we take for granted when around the world people participate in lotteries. In Australia, we're the biggest gamblers per capita in the world, and we have enjoyed many years of Tattslotto. The large draws, there's always a surge when we have the big Powerballs or we have the big draws on a Saturday, 50, 80, $100 million, even the $10 million ones on Saturday, the participation. And that's all about, we get trapped in our lives, our day-to-day lives, through all of the angst with our families and money, jobs, security, all those issues that we see happening today, which is inherent in the type of things that we get caught up with. So lotteries have played a very big role, significant role in that. Now, when you look back at that journey since 1569, I tend to focus into a point in time in about the year 1717, which sort of circles around what was happening in Europe, in the Netherlands, what was happening in France, what was happening through a lot of the powerhouse kingdoms back then that were controlling and running Europe. And the French were very interesting in the way they adopted their strategies for these lotteries. And at the end of the day, as I mentioned, it was about pooling people's money, giving a guarantee in the form of the Crown guaranteeing the repayment, minimising the money that was paid in return rather than a loan, and pooling people into getting tickets, in fact, so that they then participate in these in those days, which are significant today in today's money, pools of funds. Now, if you look back in the year 1694, then you can start to get your head around what was happening back then in England as well as France. And they were having the £1 million draws, which were relevant to the public. Now, why I allude to this is because in 1989, I was able to, with the strength of a very prominent QC and also major legal firms in Melbourne, were able to adopt the concepts of these returns through what we then called Regulation 2A, which is a proprietary intellectual property copyright document that's now certainly entrenched in the High Court as a result of some cases we took on. And that document sets the foundation of allowing globally these lotteries to be conducted as a rewards through that reward process to participants, and avoid the issues in terms of the effectively the global gaming laws in the jurisdictions. And that's been the hard part of the 20-year journey. Ironically, when I introduced it, I was the first company in the world to conceptually bring that to the Australian Stock Exchange. And of course, they jumped up and down, and the argument was that the company was delisted at the time because of it was against the quote, the integrity of the market. But when you look at the type of companies that have listed since, that's one of the greatest ironies that I have a chuckle to myself. You have betting companies, you have brothels that are listed on the exchange, you have high risk derivative companies, you've got processing entities, you've got all sorts of various industry classifications that are taken for granted today. And we subsequently had an out-of-court settlement there for that delisting, which was not insignificant, and certainly that's led to my continued belief with the $4.3 billion US claim against the Australian government for botching up where we were going to head with that lottery project globally, and the way in which we were managing that through. So, without further ado on that, I want to bring that into context as to Zoukaz, because Zoukaz is the true global platform that we've talked about. And of course, the consequence of that global platform means, very simplistic terms, customers, it means merchants, and it means a way that we can encapsulate, as I keep talking through, the value proposition of the Zoocoins through that growth factor of not just the number of customers that are or peers that are taking on board the Zoocoins, but more so the end use of that Zoocoin. And we've already alluded to end use case scenarios in earlier episodes, which is virtual real estate. We touched on yesterday quite significantly UDAs, which is the unique digital assets, and they're in competition and will be in competition to NFTs. And there's quite a serious distinction in the way in which we're looking to preserve the rights of those digital assets for the benefit of the consumers. Now, the same approach is happening with the lotteries. Now, look, we need to understand how big this is in a transactional sense, and the movement of money, the velocity or the movement of the coins in our instance, and the continuation of transaction volumes, and what that significantly means in a supply demand pressure cooker, which then relates to ultimately the value of what can happen with the Zoocoins. And that's why one of the key planks in the split chain technology is that no matter how high the price is, by having no transaction costs in relation to the transfer of the coins and making it instant with infinite fractions, it means that you can still conduct these transactions on a scale that says that, I may only wish to have 0.01 of a cent as part and participating in either the purchase of the fractions of the real estate, or in purchase of the UDAs, that's the unique digital assets, or more importantly, where I'm leading to now with the lottery, with lots of flow of those funds. Now, many years ago, we never had the luxury of banks getting their heads on fintech companies, and the way in which the world has dramatically shifted from the old lumbering beasts of banks controlling the situation with data and your accounts. And, the younger generation really aren't interested in wandering into a bank, as in my day, or participating with managers and looking at your finances in that light. They're very keen on the simplicity of apps, the way in which they can electronically move value around and electronically participate in various products, whether it's even betting and gambling. And some of those betting companies are quite significant in the way in which they have developed their apps to overcome the friction between consumer usage and the way in which those apps operate. Very, very special, actually. And we take a lead from some of the way they are designed and developed. Now, in terms of that, we never had neobanks many years ago. And the reality is, as a Zoukaz business, which flows from where we started in 1989. We never had these access to APIs or connections or bridges that simply said, look, there's two business models. One is we are a collector of consumers. We want to create the benefits and rewards for consumers for participating. On the other hand, we don't want to manage out all of the inherent problems that comes with being a bank. The issues of AML, KYC. I mean, literally the major players in the banking industry, they don't even comply with those regulations. CommBank's been hit with massive fines. Westpac certainly has been whacked around the ears for breaching these provisions. HSBC, for example, in America. So the list goes on. And even the banks have had massive just look it up, massive penalties as a result of their operations and overheads. So the neobanks come along and said, look, we'll keep the whole format digital. We'll stick to the electronic versions and still put those processes in play, but allows us as a business, which is our business is about consumer driven and merchants, to allow our customers access to those bank systems, the neobanks, but at the same time, certainly follow through that they look after their side of the business and we generate the rewards that we want to push out, driven by these concepts of the lottery going back, 452 years ago. So how does that work? Well, by having that connection to and the workings and dealings we're dealing with some of these neobanks is that there's a bridge that says when you come into the Zoukaz app, you can literally click a button that says, I'm going to open an account with Neobank XYZ. And that's through the app. And certainly you follow the opening of as you would a normal bank account. Now you can open that account. It's there. All we are seeing in our app is the transaction history, if that's required, and also the balance, which is the most important part from us that we would leave on retention with that neobank. So they're managing all your money. So there's an inherent disconnect. There's no risks in the sense other than that you've got to be comfortable with the bank you're dealing with in terms of that neobank. But you do have government guarantees in place in any event up to certain dollar values that the government protects depositor holders' funds. So you've got this, this U-Butte system that there is the protection that you want. Now, once we're saying to people, we want to encourage and build a multi-billion dollars of deposits in those banks through the connections we have. That is you, the Zoocoin holders, and our Zoukaz members. That builds in time. Now, how big can that grow? Well, let's just take the shining light in the world of these deposits and the British government, because British premium bonds is where it all sort of fits in. They've been going 160 years, since 1861. In their 2020-21 annual report, there's 202 billion pounds under management. They had 89 billion pounds inflow in the last 12 months. Now that's 7.1 billion pounds per month net. So just think about that, 7.12 billion pounds net per month that's flowing into that. Now, why? Well, from a consumer point of view, all they're doing is saying, look, there's no interest that's being earned anyway, relatively around the world. Interest is near zero. So that's not an incentive for consumers. You're only paying fees and charges, and basically you're using it as a mechanism to transfer or pay bills, etc. But you do get this for every £10. You do get this opportunity that creates effectively a lottery ticket to win multi-million pound prizes each month. So people would rather participate in that opportunity to take them out of this distressing environment that we all face economically, globally, where we're heading with COVID. The delicate balance with share values and things, excessive debts, and at least park some money into that concept for that value proposition. And that's why it's been so successful in England, because people see that as the alternative. So the only incentive there, let's get that right, is participation in the chance to win a major multi-million pound prize. That's it. But it is still hugely, massively successful. Now, of course, the trigger points there is you've got 100% government guarantee, so you feel comfortable about that, and you can get your money out as and when you please. So at least you know you've got access to cash as and when you need it, if you don't happen to win the prize. Now, when I take that and you look at that model that we've perfected, that we can do that in a private capacity with the connection to a duly authorised banking institution in Australia, anywhere in the world for that matter, and the funds are government guaranteed on the deposits, the incentive of just the prize itself is not enough. And we have the ability through our proprietary technology and rights to flavour that even better. That's been the whole purpose of why I'm comfortable with why the values are huge in our business model against the Australian government. And they just can't seem to get their head on this. That on the one hand, government gets an interest-free loan from the participants in the lotteries to do what the governments want to do. Now, in the case in the year of the 1500s, the motivation of the government was simple. We need to build ships and ports to enhance the armory of the armies at the time that are fighting the Spanish or the French. So the government had an interest-free loan, of which they then shared some of that returns back to the participants in the lottery. So the motivation in this current climate is the world interest rates, historically, no matter what part of history you pick, will always go up and down and reflect similar rates that we say will never happen. Now, in the 80s, my home loan interest rate was nearly 18%. Now, that would be a horrific to the younger generation to even contemplate how to cope with that. Now, sure, the prices of the properties were down, but relative to wages, that was a massive chunk out of the earning capacity of people. Now, if you think about the ability to fund that, if interest rates doubled overnight, the amount of people and properties that would fall off a cliff would be extraordinary. So we're going to contemplate that issue in terms of, and in the context that the governments certainly get a benefit. They're better off having these lottery programs, as in the English case, that gives them access to minimise the taxpayers' burden on funding debts. Now, we've got $1 trillion debt here in Australia. How the hell they think they're going to pay that? The concept of paying that back is not going to happen. It's just going to be on the books. Most of my generation will be long gone, dead and buried, and leaving the problem to the next generation, because the government are not capable of, they do not have the competence or the accountability to manage that out, no matter which way you go. Money is willy-nilly lost at all government levels. And there's a caseload of history of examples, whether you're no matter which side of politics you're on. Both sides cannot competently manage taxpayers' funds. Now, if they introduce these concepts like the lottery, which we're going to be doing through Zukaz, it's very simple. What are the type of things that we can do different that enhance the value proposition to end up with huge sums of money for the benefit either of the banking system, or the best thing we would do is say, look, let's partner with the Australian government. I'd be delighted to settle the $4.3 billion claim based on assisting the Australian economy through raising billions and billions of dollars government guaranteed through these lottery concepts. It's a no-brainer. Now, we would want a clip of the underlying revenues that may be earned from those funds, and those funds can come from, in a bank situation, that becomes part of the money supply. Home loans, property developments, and so on, all bank guaranteed. Now, the interesting thing is that with that level of investment, it doesn't take much to build that into billions of dollars, as in funds under management. Now, think about 1 million people. 1 million people want to participate in the proposition of this lottery loyalty reward programs at $1,000 each. Well, there's your first billion. Now, that's the first billion. Now, if you've got 10 million people, suddenly there's 10 billion. Now, it doesn't take much if that 1,000 increases to 5,000 or 10,000. And interestingly, they put a cap in England at £33,000. So people are not just sitting on 10, 20, 30 pounds. People are sitting on thousands and tens of thousands of pounds to be part of that lottery. Now, if that happens, you are talking 300, 400, $1 trillion of long-term funds under management, which the governments can access, or the banks, to use on their balance sheets. It's a win-win for everybody. But in our case, for Zukaz, there's an actual added advantage. And one of the little things that I take out of the French example in the year 1717, so 304 years ago, so we're not inventing anything new, was that they actually could make them work similar to annuities, that the longer you leave your funds on deposit, the greater the rewards may be, or the more tickets that you may be participating in relation to that particular lottery. And what you want to do is you want to make the tickets very valuable in their own right, because remember, there's only 100 million Zucoins out there. So therefore, you've got, aside from the fractions, which relates to the overall percentage value proposition, but certainly 100 million Zucoins, you have a limited supply of coins, which means you can cap that value proposition of what those participants can do or receive in these lotteries. Now, there's two types of things we can take as a bit of a footnote from the year 1717, which is quite ingenious. One is the annuity side, that is propositions for leaving your funds with the bank longer term, which gives more certainty for the way in which the governments manage that. The second is you can certainly look at the advantage for the Zucoin holders themselves. What do I mean by that? Well, very simple. Let's take those with cash. If you leave your funds on deposit with the institution connected to Zukaz, that balance, we only take the balance. Now, those lottery draws on our budget numbers would suggest that these prize pools could be anything from 1 million to 10 million per week, with major pools once a month of 50 million. Now, that's a major attraction for people to participate, because we're talking on a global scale. We're not just talking about 25 million people that are in the British premium bond concept. There's 25 million people. We're talking about access to mass markets of global participation that has never been achieved before. Now, I mentioned in my earlier episodes about a company called Yotta. Go and have a look at that, yotta.com, and they started the first one in America. So they're looking at a target market of 300 million people, and already hugely successful in the first couple of months with the amount of money that they've received on deposit for lottery. In our case, if you leave those funds, the cash, on deposit, what we're looking to do then is every dollar in our example would be one entry in the lottery as you're participating, no matter what. So you're able to receive electronically your numbers, which allows, that's the reward as part of that deposits with that banking institution. Now, that's for the cash components. The real exciting thing is that in addition to that, similar to the annuity and similar to the concepts that have come out in 1717, you'll be able to earn fractional rewards in Zucoins. So the greater the numbers of deposits, the greater rewards that we can do within our treasury for fractions to be receipted of Zucoins based on those deposits. Now, those rewards don't necessarily have to come from our treasury. Those rewards can also come from benefits given by merchants, because the merchants are giving you will know that at any point in time, there is a pools of people that are participating in that subject to your consent will be able to send vouchers. And those vouchers can be inclusive of cash bonus vouchers to be redeemed at the merchants, online or bricks and mortar, or alternatively, the merchants themselves can fund fractional benefits of Zucoins for being part of their business. So it's the first time that both Zukaz as an entity, as well as its merchant database, can contribute to the rewards of those that are participating in the lottery. Now, that has never, ever been done. That the whole community becomes the basis upon which we can participate and help consumers save. Now, there's a wonderful concept of having some of your money savings put away for obvious reasons. You know, history will tell you, I mean, in the year 1717, they were paying 6% annuities. So nothing's changed in that regard. And also you could see that by the time we entered the late 18th century, everything went off a cliff with the Depression. We had stock markets collapse. And the good news is that the younger generation never listened to the older generation. And of course, we go down the same road, and exactly the same thing happens through history. It'll always happen. There will be another share market crash. There will be another depression. These things will always happen because the managers of our money, the managers in government, end up being younger people as well, and nobody listens. So we're going to have these cycles, and you may as well prepare for them. If you've got some money tucked in your lottery, well, at least you've got some buffer. Also, you'll get the benefit of fractional rights to some coins, which are valuable in their own point. And secondly, the attraction of what the rewards can come through from the merchants. Now, that's the first thing. The second is, let's talk about the coin holders. What we're going to do is that because the coins are the most valuable crypto that we see, that I see long term, which allows the usage, the more coins that you retain and have in retention, the more effective tickets and entries you will have in these lotteries. You will be participants at a better scale, at a higher scale. Now, that hasn't been done before. Now, that also means that those with crypto, as in ZooCoins, will be able to sit there and enjoy the rewards of those entry tickets, if you like, pursuant to what we call Regulation 2A. I'm not going to go through the legals of that, but very comfortable with fully compliance in terms of global gaming laws, etc. That's been a 20-year litigation saga, which we've got through. But point taken that this allows the capacity of Zookaz to put that in play. Now, one of the twists that came out of the 17th century was that if I, either through leaving money on deposit in cash or holding ZooCoins, which gives me this electronic entitlement to my tickets, one of the tricks that came out of that, which encouraged massive growth, was hugely successful. They had £1 million lotteries back then. Now, you know, when you're talking £1 million in 300 odd years ago, it makes 220 billion pounds today look very minuscule, the value of money back then. And you can do your own maths on that. What £1 million 300 years ago is worth today. But the key to that was, how do you make a secondary market, if you like, in relation to that entitlement? And the answer, we say, is very simple. That if I have, let's say there's a $20 million draw that's been conducted regularly and it's on Saturday this week, I will be entitled to X number of electronic numbers or tickets because of my interest in ZooCoins or because of the money that I have on deposit. And what we're going to allow is, because we already have a trading platform, which is the trading of the vouchers, and in our world, a voucher could be anything. It doesn't have to be the $100 provided to you by one of the merchants for goods and services. It can be your UDAs, your unique digital assets. It can be your real estate that you want to trade. But the third round, which is all about today, is that you may actually decide to trade your rights to that participation in that particular draw. Now, it's exactly the same as what we've put in play with the merchant vouchers. If you receive a $100 merchant voucher, which can be redeemed at your local electronic shop, I may not be able to use that. But because it's real cash and real value to the $100, I'm in a position through Zookaz to sell that voucher to a third party up to the value of the $100. Now, there will be people that don't necessarily want to be running around collecting vouchers, a little bit lazy, and they can go searching for those on the platform that want to sell those vouchers. Now, I may put it up for $10 and receive $10. Now, I receive $10 for nothing because I haven't done anything other than collect the $100 voucher. Why do I know this works? I mean, my wife was very active in collecting vouchers for beauty products when we did the test in Geelong and Albury. And she got quite successful at collecting 18 $20 real value beauty vouchers for hair and products and so forth from the local hairdresser shops here and beauty salons. And she was able to trade those out for $3, $4, $5 to others that wanted the $20 value. Very simply. Now, that's a business that can be built up. And we know that model works 100% successful. We in the Geelong trials, certainly the young university students were very active in collecting vouchers and on selling those to those a lot older than themselves as a result, and making money. But the same can happen with the lottery ticket, which has never been done. So if I'm entitled through my ZooCoin holding or cash at bank, which is held by the third-party banks, we have nothing to do with the money. All we do is get a balance. We know that X dollars are sitting in the account. All of a sudden, I'm entitled to 10 tickets in Saturday's draw, as I mentioned earlier. What's the value of that? Well, the value is others can't get those tickets. because one, there's a limit of 100 million cap of Zoocoins for a start, and you've got to be on the Zoocaz system to be participant, because if we don't know your balance of dollars or coins, we can't. It's a decentralized network, so there may very well be, of that 100 million coins, there might only be 10 million that want to register, that we need to see what your balances are, because again, we're not a centralized network. We have to be a merchant, just like anybody else, to encourage people to use Zoocoins once it's freed. But let's say that there's only 10 million. So there's a cap. There's only 10 million Zoocoin participating in that multi-million-dollar lottery. And whatever the deposits in cash are, they are also participating. So what the lesson out of the year 1717 was, again, 304 years ago, they did exactly that. People on-sold the rights to participate in these lotteries. And the success was phenomenal. The amount of return of which we would take as a business a small clip on those sales, just like the vouchers. We've been up front and center. If you have a voucher, as in that early example, and you've made a profit because it's been received by you at no cost, it's cost you nothing to receive a merchant voucher. The merchant knows he's going to pay the $100. It's cash. It's not two burgers for the price of one. If I've made a profit of $10 on that voucher, then accordingly, we take 25%, of which we reward that back. Percentages of that go to our database for the merchants. There's a reward back to them. It goes to our consumers as well, if there's a sort of an influencer type environment that's people bringing on board. And certainly we make some money. If you look at that, then of course, if you're going to make money on the tickets of people wanting to be in that lottery, they may only pay you $1, but you might have 1,000 entries. Why? Because they can't have the money on deposit. They don't have the money. And B, all of a sudden, they don't have coins, because you've got the coins. They may buy coins in time to be participants, but nevertheless, that concept worked an absolute 100% success in the 300 years ago. So we're in a position to do that. We have the technology. We have the split chain that can cope with the way in which we record those ticketing datas that makes it legitimate. You won't find anybody. You'll be able to search and check your tickets against the database. It gives 100% proof of ownership that you're in those draws. You won't have people scamming and carrying on about, different phishing sites or trying to create tickets that aren't there. You'll be able to validate every single ticket, whether or not you have received a ticket through your Zoocoin holding or through your deposits, or you have actually traded that ticket and the ownership transfers to the new owners through the Zoocaz network. Now, I keep coming back to how powerful that is. It's powerful because it's not me waffling on about will it or won't it be successful. It has been a success, and I take the date of the year 1569. This has been around for 452 years. I quite enjoy that historic period, the Golden Age in the 17th century. That's 300 odd years ago. And history always repeats itself. Nothing changes. We think we're smarter. The technologies just make it a bit more interesting and easier. And certainly we're in a unique position that with the split chain and the uniqueness of your coins, because of the solving the trilemma problem, that is, everything happens here between the peers. Everything comes out because you are the peers in control of your data. And with that control comes the power of which you can use that to your advantage to make money in the concepts that we're bringing to you. And there may be millions of other concepts as a result of others adopting the split chain technology. Why? Because they don't have to worry about miners doing proof of work. They don't have to worry about an Ethereum that's running around with proof of stake and who's going to hold the network together. They don't have to worry about fees and charges. That's crucial. Everything happens at zero cost. Everything happens instantly. And if you prove with the proof of that, then you can prove the product lines, which what I'm here to talk about, the lottery. Now, what does that mean at the end of the day? Well, at the end of the day, it means you have global mass participation, which is proven by the very concepts that I've alluded to going back 452 years. And there's other countries around the world that are doing similar concepts with great success. New Zealand's had it running through the post office called bonus bonds. Massive success. So, but they're all jurisdictional driven. They're all within their jurisdictions. The age of this technology, both in terms of proof of ownership through split chain, the security that comes with that, both in terms of the way in which the peers are dealing amongst themselves, means it's on a global scale, which means your market goes from 25 million participants in England through to potentially billions of people globally, which means that you could have the first products where the institutions that come behind Zukaz are holding trillions of dollars because we can add different reward programs based on the generation that I've talked about with merchants and things. Now, just as an example, you may decide that you're not in a hurry. Rather than your superannuation, a portion of your superannuation can be in the crypto, of which the superannuation fund that you run, obviously it's long term, you're talking retirement at 65. Then, of course, that super fund is weekly, day in, day out, participating in lottery programs. Now, it may or may not get the big one, but the percentages are interesting too, because these systems are designed to try and get some prize to the participants. Now, in England's case, you've got a 1 in 27,000 chance of winning a prize. Now, when you think about the gambling component in Australia at least, the billions of dollars, they're literally lost, because you think you're going to participate in a $20 million draw on Saturday. The reality is you've got a 1 in 8 million chance and you're losing your money up front. So the concepts of savings, the concept of the coins, the concept of tradable rights to the entitlement that you have as a result of being part of that ecosystem is very significant. And I just wanted to leave that. That's why I will never give up on releasing the product that I'd founded as the first time ever in Australian history in 1989, in September of that year, to introduce that to the corporate world, because it's so valuable. The modelling that we've had done since that date tells us that. The entities and the governments behind that product tells us that. So for government perspective, they are crazy not to even think about bringing these systems in play here in Australia, for example. They will not satisfy the $1 trillion debts that's coming, or it's already there, let alone the lack of accountability in the way they manage your money as taxpayers. But if the guarantees are in place, someday we may have more accountability of politicians, but it won't be in my lifetime. So, ladies and gentlemen, lotteries, very significant, because it comes back in closing to that little formula, MV equals PT. And that little formula means the more quick movement of money within the ecosystem, or in our case, coins, the volume that happens with that, with transactions and turnover, can only lead to one outcome. And that is where I'll refer you to the documents we presented to you on our modelling as to the value propositions of where these coins go. Why you pay $43,000 for a Bitcoin, again, I have absolutely zero idea. Coming from my financial accounting background and the journey that I've had, it makes absolutely zero sense to me. But what you need to do is take away the speculative element, remove that proposition, and Zoocoins can run it down, because you've got the weight of numbers, you've got the weight of products, and it's an exciting time. So thanks, everybody. Thanks for being part of it today. I'm sure that you'll start to do a bit more research on some of the things I've said. There's nothing there other than what the facts are behind it, and look forward to tomorrow's episode. So be safe, be kind, be Zookind, because it's Zoo time. Cheers, everybody.